Nvidia stock was down over 3% today as there are some fears impacting the data center market, the capital expenditure market, and maybe some slowdown in data center investment. Now, I find this funny how every quarter, a few days before earnings, we start to see this fear, uncertainty, and doubt for Nvidia. And during the earnings call, we kind of hear that, hey, look, this is just a lot of nonsense and the growth continues. I honestly believe what's happening right now is a lot of noise, and there is still a lot of bullish takes for Nvidia. And I kind of want to take a closer look at this kind of recent news coming out from Microsoft and why I believe there's more to this story than the market seems to think. So let's get started. But first, check out my special offer at fool.com/Jose and check out my free daily semiconductor newsletter, whatthechip.happened.com. So let's get started.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so two popular stocks today were Microsoft and Nvidia. As we saw earlier in the episode, Nvidia was down roughly 3%. I want to say one of the main culprits was Microsoft, as there are reports that Microsoft canceled leases for AI data centers based on some recent research that came out from an analyst. And many are saying that this could be an early indication of oversupply in the AI space and could kind of continue to trickle down and finally eliminate this AI bubble. Now, I want to take a closer look at some information that I have here, but really quick, I personally still don't believe we are in an AI bubble in forms of capital expenditure. I mean, we've heard from every other data center company, from Amazon most recently, that they could have continued to grow their overall data center market if they had more capacity. And that's the reason they continue to invest in overall infrastructure. It's not like there's fake revenue, there's actually real revenue, real earnings coming from the cloudy market. And right now, they are still capacity constrained and not demand constrained. So this is why I believe from these indications of big tech players that there is no AI bubble. Now, I think Microsoft has a very, very unique case. And if these rumors of these cancellations of leases is true, I believe it's more changing hands than a true destruction of market. And let me explain a little bit more. Now, I'm going to pull up this kind of presentation. We can see TD Cowen is the analyst that came out with this research over the weekend. I think it was either Friday night or Saturday morning that we started to see. But TD Cowen's channel checks that Microsoft has canceled about $11 billion of data center leases, potentially due to overcapacity. And I want to say, I think Microsoft has been one of the biggest fear mongers of the data center market. Earlier, I want to say late last year, I think we saw Microsoft CEO said that they were no longer chip constrained, that they were power constrained, and that kind of created some form of volatility for Nvidia stock. Now that I think about it, Microsoft CEO might have something against Nvidia, as they're always trying to say something about the data center market. Now, during their most recent earnings, the CFO mentioned this in Microsoft earnings, that while they expect to be AI capacity constrained in Q3 of this fiscal year, which is for them is pretty much Q1 of calendar year 2025, by the end of fiscal year 2025, they should be roughly in line with near-term demand given their significant capital investments. So this kind of discussion from Amy Hood, the CFO of Microsoft, is kind of an indication that, hey, look, maybe the demand for AI is slowing down, as eventually Microsoft seems to be able to catch up to demand. And now this is going to be a scenario where, hey, look, maybe we're actually too close to over investing, and it could lead to kind of bearish sentiments in the near future for the AI data center market. So we can see fear is heavy before Nvidia earnings, and I feel like everybody right now wants to be that one analyst that finds that crack in Nvidia's moat, and I think that's very, very dangerous. I think maybe TD Cowen might be like, hey, look, we got the aha moment of why this is going to be the bearish case for Nvidia. I personally believe that there's a lot more to the story. And I don't think this is the game over for Nvidia just yet. Obviously, I'm not a permable. I do believe there at one point will be an oversupply issue, but I don't think it's happening right now based on everything we've been reading through all the earnings calls. Now, they go on through this research, kind of talking a little bit more about Microsoft kind of pulling back on a couple of hundred of megawatts of data center power, and Microsoft is using this a kind of a power delay as a justification for termination of these leases. And TD Cohen actually says that they've actually heard this story before. A similar story was told a few years ago by Meta, which eventually led Meta to reduce their capex for that year. So many are saying, hey, look, we've seen this before. We've seen this story happen before. It's the same thing happening right now. But one thing that they didn't mention there is Meta at the time, they were building data centers, but these data centers, they believed that eventually needed to move to liquid cooling state. And it had a whole different design compared to the data centers that they were building. So Meta actually wanted to take some time to finalize the proper way of building the most efficient data centers for the AI market. So even in that story, while Meta did kind of reduce their capex guidance for that year, in the long term, it was a bullish trend for the AI data center market. So sometimes these analysts forget to tell kind of the whole story. Now, this TD Cohen kind of explains why that's happening. And overall, they say that they're not sure why it's happening, but they believe it could be a oversupply issue. And obviously, this is creating some fear in the market. Or the second reason is this is a shift from OpenAI. And I think the shift from OpenAI is very, very crucial. And I'll discuss that in a bit. But first, if you are enjoying the episode and getting some content out of it, remember this video is completely free. So if you are getting enough value, make sure to hit the thumbs up and make sure to hit the subscribe button. I truly would appreciate it. Now, luckily on X and social platforms, we get to hear and see and find a lot of information pretty quickly. And from a recent post here, we see that Jeffrey posted Microsoft on the road. And a question was addressing this kind of Cohen report. And the Microsoft strongly said that they're not making any changes to their data center strategy. They're emphasizing that the investments are made based on a 10-year demand outlook for cloud and AI, and regional forecasts are adjusted as needed, and the core strategy remains intact. The company also kind of mentions that, hey, look, there might be some misunderstandings in the broker report regarding the definition of leasing, noting that long-term deals, 15 plus years, are sometimes classified as leases, even when Microsoft operates the data center infrastructure. So we can see that Jeffries is not that, doesn't believe this data center issue is really an issue. Now, I'm going to give my overall prediction. I think if Microsoft is reducing their capacity is mainly because of OpenAI, and it's not necessarily a bearish case. So we saw in mid-January that the Stargate program was announced, and the Stargate program was kind of this massive AI infrastructure build out to help OpenAI with their overall training and inference. And they kind of mentioned that, hey, look, this partnership is going to build a deep collaboration between OpenAI and NVIDIA, as OpenAI, NVIDIA, and Oracle will be working closely to build and operate a massive computing system. There also was a newer partnership between OpenAI and Oracle. So for those that are not familiar, let's kind of take a step back. Microsoft is an investor of OpenAI, and Microsoft has kind of been OpenAI's sugar daddy, if I may say, or rich or rich stepdad, right? And has kind of been investing a lot of infrastructure for OpenAI. Now, from recent interviews that I personally have heard, it seems like Microsoft CEO believes that Sam Altman wants even more and more computational power, and they pretty much just want more spending done on their solutions. But Microsoft has to be kind of, I don't want to say safe, but they have to be somewhat level headed to how much they invest. They can't kind of just leave a blank check for OpenAI. And OpenAI believes that because they don't get this blank check, it's causing them to slow down in innovation. So it seems that OpenAI and Microsoft came to an agreement where OpenAI can go and find another rich uncle, and that other rich uncle can help with kind of AI investment infrastructure. That other rich uncle ended up being Oracle. So Oracle is now building AI infrastructure where OpenAI now is able to use the computational power from both Microsoft and Oracle. Now, this is both good and bad for Microsoft. I kind of explained this in the video that Stargate came out over a month ago, and I mentioned this is both good and bad for Microsoft. The good side is Microsoft will now be able to control its capital expending because they don't have to have that open wallet for OpenAI. Now, the bearish case or the bad case about this is Microsoft is going to be losing out in growth potential because OpenAI would have been a big user. So it was a give and take, right? They reduced their capex, but they limited their growth in the same reason. And OpenAI is now going to give most of that growth to Oracle. Now, we can kind of see this in kind of some press release that Microsoft meant. They mentioned to further support OpenAI, Microsoft has approved OpenAI's ability to build additional capacity primarily for research and training of models. This is pretty much saying Microsoft, hey, look, I gave OpenAI the permission to go find a rich uncle that they can kind of continue to increase capacity. And during the earnings call, Satya, kind of the CEO of Microsoft, also mentioned something similar. He kind of wanted to talk that right now you're in a way where they're building this massive fleet, and this massive fleet is data centers. But you have to find the right ratio of how much you're investing because you can't buy too much at one time because Moore's law and just innovation continues to provide better products every year or every 2 years, right? So for Microsoft, it makes no sense for them to invest dramatically in the H200 as then the Blackwell comes out and the Blackwell is so much better. So you have to kind of do your purchasing in like a step way where you buy some H100s, then you buy some Blackwells, then you buy some Blackwell Ultra, then you buy some Rubin, and the list goes on and on. And again, that was something that Sam Altman was not happy about. Sam Altman just wants more and more compute, but Microsoft has to be able to find the right ratio of monetization and demand-driven monetization on what they see as training expense. So I think if some of these leases were true, it's most likely because Microsoft is now maybe reducing some of the infrastructure that they needed for OpenAI. But the reason why I don't believe this is bad news for NVIDIA is at the end of the day, that capacity is just moving from Microsoft and is moving over to Oracle and this Stargate program. So it's just that same, it's that market is still there and that market growth opportunity is still there for the AI data center market. It just seems Microsoft wants to cool it down a little bit. Again, I think the market is overreacting and it's just trying to find fears right before NVIDIA's earnings call. At the end of the day, I can mention, I believe the growth opportunity and the demand for NVIDIA solutions are still there. So I hope you guys enjoyed this quick episode. Take care and see you all next time.